If you're having trouble trying to figure out how to locate and secure business financing, then let me show you the exact process I use for any size of business and any type of business financing or leasing requirement. Hi, I'm Brent Finlay, and I'm a business financing specialist that helps companies all across Canada with their business financing problems, challenges, and requirements. In my last corporate finance role over 20 years ago, I was responsible for a national restructuring of the company I work for, which is a fancy way of describing cutting costs and lowering headcount. And during the process, I decided to restructure myself out of the company. I had come to realize that while I'd gotten a great education learning about the financing complexities of large corporations, it wasn't much of a life working for these big companies, and that small to medium-sized companies had the same types of financing issues, but just on a smaller scale. And they didn't always have the same internal expertise available to them. So I decided to become an independent business financing specialist. And 20 years later, I've been able to help hundreds of Canadian businesses locate and secure millions of dollars of business loans and leases. After I went out on my own, I quickly realized that the way many business owners and managers think about business financing is totally backwards, which is why finding and securing the right business loan or lease can be hard to figure out at times. Marketing 101 tells us to figure out what the customer wants and then develop products and services to meet those wants, and then do a better job of delivering more value than anyone else to keep those customers doing business with you. The business financing industry takes a totally opposite approach. Financing companies develop lending products for certain uses, business profiles, and different industries, but they work backwards from both their money supply and their risk model, not the end customer. The differences between lenders is their financing models, which includes how they qualify borrowers and how they manage risk. And there is also a commonly held belief among many business owners that the major lending brands, like chartered banks, provide the best financing options, and that they can do more for you than smaller branded lenders. This is not always going to be true. Business financing is about fit, not brand. Lenders expect you to fit into what they want, not the other way around. The question then for any lender is, are they a good fit for your business requirements? And are they a good fit right now? A good business financing fit is when your request for financing, combined with your business profile, meet the lender's current requirements. If you can't meet the requirements, they aren't going to be able to help you, regardless of what their corporate branding claims they do. Consumer financing works the same way, but it's far easier for finance companies to provide loans and grant credit to consumers, as qualifying is typically based on a credit score and a paycheck, which most people have. Business financing, on the other hand, is much tougher because of all the variability that can exist from one business to the next, from one request for financing to the next. Sometimes there are too many financing options to choose from, and it can be hard to figure out which one is the best choice. Other times it can be hard to find any type of financing option for a particular capital requirement. But regardless of the source of financing or your financing requirements, the process you need to follow is always going to be the same. The first step in the process is to clearly define your business financing goal or objective. Anytime you're trying to get a business line of credit, business loan, mortgage, equipment lease, or some other type of debt-based facility, your financing goal is always going to be the same. And simply put, it's to locate and secure the financing amount that meets your requirements or terms and conditions you're prepared to accept by a certain point in time. While your goal stays the same, the three components of it can vary from one financing request to the next. Let me explain. Every time you need business financing, the amount of funds and the application of those funds is likely going to be different. The terms you're prepared to accept may be different, and your timing to get financing in place can also be different. So the first step in any financing request is to clarify the goal before doing anything else. For example, if we look at a request for an equipment loan or lease, it's usually not hard to get approved for the acquisition, refinancing, or leaseback of heavy equipment and machinery most of the time, as there are numerous financing options out there. But does the financing approval you receive from a lender meet your stated goal? Does it meet your requirements or terms and conditions you're prepared to accept by a certain point in time? This is why business financing requests of all types can be hard to figure out. And whether an application for financing is easy or difficult to get approved, the same problem exists. I'll call this problem number 1. How do you quickly figure out which lenders and financing options allow you to achieve your stated goal? For very standard financing requests, there are typically going to be several financing options to choose from. I would estimate that approximately 80% of all financing applications are for standard requests, which are what most lending models are based on. Standard requests are for very common amounts and applications. They're easy to assess and have few requirements or conditions to get funded. But about 20% of the time, an application for business financing is for a non-standard request, where one or more elements of the request cause the matchmaking process with a lender to be more difficult. A non-standard request will have one or more elements fall outside of a lender's credit box and typically results in application delay or decline. A non-standard request can result from a variety of different elements, including the specific use of capital, the industry, time and business, and organizational structure, expansion, refinancing, consolidating, and restructuring requirements, the financial profile and credit history, and many other potential elements. If you're currently having trouble getting approved or funded for any type of business financing requirement, then you're likely dealing with a non-standard request. So for problem number 1, you typically have too many financing options to choose from for standard requests and not enough for the non-standard requests. Let's move on to problem number 2. Business owners and managers don't take control of the process and give all the power and control to lenders. A lender's goal is to cast a wide net, attract leads, screen candidates, and determine which deals they're interested in. It's definitely a volume game for them. They pick the applications that fit their lending requirements and can end up approving and funding a small percentage of the deals they actually receive. Remember that they are selectively determining what applications fit their risk model and who they want to deal with. So why can't you do the same? Why can't you be the one doing the filtering and screening? Most lenders say no way more than they say yes, and there can be lots of variability between what gets approved and funded today compared to what got approved and funded last year or will get approved and funded next month. Spending time working with lenders or brokers that can't help you achieve your goal is not only a waste of time, but it can also cause you considerable financial distress if the right type of business financing isn't available when you need it. The good news is that the solution to both problem number 1 and problem number 2 is the same, and that is to take greater control of the financing process. This is exactly what I'm going to show you how to do. Here's the 5-step process I use to locate and secure business financing for all my clients. Step 1, as I've already gone over, is to clarify your financing goal. Step 2 is to identify lenders that can actually help you achieve your goal. Step 3, create an application package that has at least an 80% probability of generating an approval you'll be seriously interested in. Step 4, manage the application process to produce approvals you're going to be prepared to accept. Step 5, meet the conditions of funding to get funds in your hand by the time you need it. For step 1, you need to get specific about what you require, why you need it, and when it needs to be in place. The second step is to identify the most relevant lenders. Remember that business financing is about fit, not brand. If you don't take the time to pre-qualify your lenders, you could easily get headed in the wrong direction, waste a bunch of time, and either not find what you're looking for or end up settling for an option you don't really want but are forced to take because you've run out of time. The most relevant lenders at any point in time are going to vary from scenario to scenario based on several factors that I'm going to go over in detail in the free report available through the link in the video description directly below this video. The third step is to create an application package that properly describes what you need financing for, provides up-to-date and accurate financial information, and tells the story of your business, including when it started, what it does, and how it got to this point in time. I'm going to go over several ways that financing requests, which should have been approved, got turned down strictly because of the information or lack of information in the application package. The fourth step is to manage the application process to secure the funding you need in the least amount of time possible. This also involves reviewing the conditions of funding to make sure an approval is truly something you can take advantage of before you accept it. If you get this wrong, it can cancel out all the hard work done in the first 3 steps. And the fifth and final step is meeting the conditions of funding in order to get money in your hands or paid to vendors by the time you need it. An approval isn't worth much if you can't meet all the conditions of funding in the time you have to work with. By getting good at each step, your overall probability of success goes up and over time, you're going to get better and better results. Let's face it, if you're working in a capital-intensive business, you're going to require business financing from time to time, whether that be for working capital, inventory, equipment, real estate, a business acquisition, or something else. And every time you need capital and you apply this proven approach, you're going to get more efficient with the overall process. If you'd like to get my free report that explains each of the 5 steps in greater detail and shows how you can immediately start using each of them to improve your own business financing process, go to the web page address listed on the screen or click on the link in the description directly below this video to request the report. If you want to discuss a specific business financing scenario you need help with, you can send me a note through my contact form or book a call through the link in the description to schedule a time when we can talk. Thanks for watching, and I wish you all the best with your business financing endeavors. Take care.